Hi, everyone, and welcome to the next episode of the Bitcoin Collective podcast with me, Jim. Unfortunately, no Jordan again this week, and I'll explain that one. This is your journey into Bitcoin, macroeconomics, and sound money. So, Jordan, that's 2 weeks in a row he's been absent, and he's not on the substitutes bench. What he's doing is he's working so hard on the conference. There's a team of them. They're in another room, and I'm in awe of the work that he's doing for such a young guy. So full of passion for Bitcoin, so full of passion for wanting to change the world to make it a better place. And I always say to him, I say, "Have you checked the Bitcoin price?" He's like, "I don't look at price. I'll look at the price in 10 years, Jim. Stop bothering me." So that's Jordan. So we've got another fantastic conference guest on today, and I love this guy because he'll put his boxing gloves on with anyone, but he does it in such a reasoned and methodical and measured way. Greg Foss, welcome back.
It's a pleasure to be here, Jim. Thank you for the kind introduction. I want to make one, just adjustment to your kind introduction, and that's that. You know what? I am sometimes not measured, and I have to apologize for that. That's the old fired up trader in my gut. That being said, I am learning from very sound and reasoned professionals like our friend Jeff Booth. You just mentioned, I can't remember if you mentioned here or on the introduction that James Lavish was just on your show, but
Yeah.
James and I are cut from the same cloth. But I really like his style because he, doesn't fill the room with explicatives like I sometimes do. So I'm not going to swear on this podcast, or I'll do my best. But sometimes I'm not as polite as I should be. So let's get at it.
So it's interesting. So I think Jordan and I spoke to you about roughly 6 months ago,
Yes.
and we were a crypto standard podcast, and you very graciously came on, and we asked you about Bitcoin, and then at the same time James Lavish came on and Larry Lepard, and you three were part of the process of Jordan and I moving away from crypto and actually doing some proper research and study into Bitcoin. So, even though we had you on, it was more of a we reflected and on the content that you had given us and the questions that you had posed, and we went away and read, and we've completely changed our mindsets.
Well, that's encouraging. I always say the mark of a very good risk manager is to change their thesis when the information changes. And I've had a career 30 years of sitting in a trading chair. And, I might be slightly better than average. I think I've probably made 60% good decisions and 40% bad decisions. The key is to manage your bad decisions so they don't wreck you. And I view crypto along that line. I confess that, when I started, I was sold on Bitcoin, but I did get involved in some of the shit coins, the other alt digital assets. And to the extent where at one point I was describing Bitcoin as digital gold, Ethereum as copper, and Litecoin as silver. And you know what? That was totally wrong, but it was how I ventured into the space to begin with. I've since become full on. I would call myself a Bitcoin maxi, but I'm not a toxic maximalist, I hope. And I own other assets besides Bitcoin, other hard assets. So like Larry Lepard, I own gold. Bitcoin's a larger holding for me than gold, but I do own other hard assets like real estate. So what it comes down to, Jim, is I think we all go on a similar journey, right? It's a learning process, and I know the Bitcoin community can be a little harsh. I commend you guys, though. I like what you guys are doing. I like the fact that you are gentlemen enough to admit that, yeah, okay, maybe we started down a different path, but now we've made corrections. And so for that, I applaud you. It's again a mark of a good risk manager. Control your mistakes. Those are the things that make you blow up, and ride your winners. So from a guy who's, made a living and survived 30 years, I'd say the average trading life is, I'm going to say less than 8 years, just because I don't know any statistic, but just based on my experience, probably an average career for a trader, 8 years or less. Maybe it was 6 years. And the fact that I did it for 30 years, and there's other guys that have done it for 30 years, they have to be doing something right, because the market is very, it's very efficient. It weeds out the losers. And it's not a fun process to blow up. It's painful for your profit and loss. It's painful for your bonus. It's painful for your career. And and mostly it's very painful for your pride, right? Like,
Yeah.
you tend to be a type A personality. I think you and Jordan would be type A personalities, and you've got pride. So well done, sir.
Yeah. Thank you very much. I'll take that on behalf of Jordan as well. So, right, let's get into this. I've got so many questions to ask you
Sure.
in the short time we've got together. We before coming on, you and I chatted and used the term echo chamber, and I had already written down the term bubble. So, are we, as in those who are Bitcoin advocates, maxis, whatever you want to call it, followers of, are we living in an echo chamber and a bubble, or do you see this, or do you see over the last wee while things changing and us coming out that echo chamber, with the different amount of conferences and the different podcasts and all that sort of stuff?
I actually do, absolutely. And when you had sent me some notes, um, at pre interview notes, and I saw the term bubble, but I actually thought of bubble as being a price bubble,
Mm.
not probably what you were referring to it as a bubble, a social bubble, and echo chamber, social bubble. There's definitely a Bitcoin echo chamber. That being said, the good thing is that echo chamber is growing, and on a daily basis, introducing and welcoming new participants. And that includes, you don't even have to look past something like a very material announcement that BlackRock, the world's largest asset manager, now is going to be an investor or allow investing in Bitcoin for BlackRock clients. And as the world's largest asset manager, everybody who's lower than them, which is everybody else, takes notice of what the largest asset manager is doing. So just from an investor's perspective, that is growing. Adoption is growing. Fidelity, which is the number 5 global asset manager, has been involved in Bitcoin for a long time. I love their research. And they have a price target for Bitcoin in the year 2030 that's based off of adoption curves for the internet as well as cell phone usage. And they are able to come up with a price target on Bitcoin in the year 2030 by drawing similar adoption curves for Bitcoin versus those other two technologies. And, I love their research. They are number 5 on the global asset manager list. I'll throw out a question to your listeners. Jim, do you think there's a chance that BlackRock embraced Bitcoin because one of their competitors have embraced Bitcoin? And I'll tell you, having been involved in the business, 100% yes, because clients of BlackRock's who wanted to invest in Bitcoin, but were not able to on the BlackRock platform, would move to the Fidelity platform. And the competitive instinct of BlackRock is, hey, I don't want to lose this client. So, there's adoption, there's asset managers that are embracing it, there's mom and pop, there's children in elementary schools. We're seeing it in El Salvador. LookingGlassEducation.com, a platform I'm very proud to be involved with. We see it every single day with people taking our Bitcoin courses online. And so all I could say is, yes, it's a process. Think of it back into what it was like. And you and I know this because we're old enough to remember this. Many of the young kids aren't. What it was like in the late 90s when the internet was just getting started, right? There were so many people who didn't understand the internet. Oh, it's not going to catch on. You had Paul Krugman, famous Nobel economist, right? New York Times flunky that basically said, in my opinion, the impact of the internet will be no less than it will be somewhere around the impact of the fax machine. It's fair to say that there will always be doubters, but you got to look at the numbers. You got to look at the math. And yes, this is a bit of a community that does call out. I mean, this Bitcoin community, there's two things about this Bitcoin community. Firstly, I believe it to be one of the most genuine, sincere, and honest communities I've ever been involved with. I'll include generous in there as well. Okay. And then I'll also say they can be very, very opinionated and toxic. And it's not mutually exclusive. You can be a bit of both, right? And everyone says, look, Bitcoiners call out the truth. And that's what I love about them. You and I have become friends, never met in person. I'm looking forward to meeting you shortly at the conference. But the truth is, I trust Bitcoiners implicitly because I believe that they tend to tell the truth much more than some of my old cronies on Wall Street and Bay Street.
Yeah. So when the bubble is either growing, as if it exists at all, but it's growing in circumference.
Yes.
Let me stick with BlackRock and let's sort of reverse engineer this a little bit. So one of the biggest, if not the biggest, I mean, I get stuff coming up in my Twitter feed all the time about how wonderful BlackRock are. They keep telling you what they're doing all around the world, and I go, okay. So they've got the Aladdin platform, and the Aladdin platform allows big investment companies to go in, and that's them. You and I can't go on Aladdin. So has that been do you think that's been a push or a pull?
I believe it's been a pull. To define. I believe when you ask if it's been a pull, is it their clients pulling it that way?
Yeah.
Is that what you mean?
Yeah.
Yeah, no, 100%. And I tried to make reference to this. I believe BlackRock had to do this because Fidelity was getting traction, right? Fidelity announced they did 401k, allow 401k. Here's the thing about the difference, and we need to be careful about this, okay? BlackRock is the largest asset manager in the world, and a large part of that is due to their passive investing strategies, right? Their ETF platforms, a platform that I don't always agree with. And the reason I don't is because when you blindly buy an index like the SPY, the S&P 500, okay, you're buying an equal weighting of all the companies that make up that index. And that can include some companies that really aren't that valuable. In fact, it includes a company like Western Union. Okay. And the reality is, I think Western Union is on its way to the, to the glue factory, like Blockbuster. Okay. But when you buy the S&P 500 because you want exposure to the equity bucket, you buy a piece of Western Union without really doing any research into the true value of Western Union and its business prospects. And that I believe that Western Union will be so disintermediated by the payment rails of Bitcoin that, it's sort of like watching, as I said, Blockbuster competing with Netflix. So, BlackRock is a massive organization that gets a lot of money by people who just want to have low fee investments, exposure to a broad basket of investments. So they'll have bond ETFs, they'll have stock ETFs, they'll have ESG ETFs, all the stuff that, look, that's Wall Street. That's Wall Street designing structures so that they can make it simple for investors to get exposure. It's not always perfect, in my opinion. That being said, it is what it is. You're not going to fight it. People like paying low fees. Low fees means passive, not active management. So the active management comes when you have clients pulling you there. Clients who say, if you don't put it up, I'm going to go to Fidelity.
Yeah.
And if you're the CEO, Mr. Fink of BlackRock, you're like, I need to be competitive. I need to compete against the other platforms that do offer this silo. And so, not surprising, in my opinion, that's how it went down.
So one of the interesting things for me about that whole announcement, 18 months ago, literally to the week, Elon Musk came out with a tweet about Bitcoin, and Bitcoin jumped up $4,000 in, I don't know, an hour.
Yeah.
But BlackRock came out and there's hardly even a peep.
Uh-huh. Yeah. Okay. Here's the different markets that we're in, right? Right now there's no question we're in a digital asset bear market. Let's run through why we had such a spike and then such a fall. The spike was no doubt helped in part by announcements like Elon Musk, Tesla getting involved. But really, the big spike came when you had the UST Luna participation, where the algorithmic stablecoin was buying Bitcoin right at the top of the market. Okay. So Do Kwon had designed an algorithmic stablecoin that decided that they were going to hold a bunch of Bitcoin. And that buying of Bitcoin definitely helped push the envelope towards the top of the range. Okay. We'll use a number of 65,000. And then when Luna unraveled, and then that caused Celsius to unravel, caused a lot of other platforms to unravel, coupled with Elon Musk admitting he sold into the downdraft from 70,000 down to 30,000, down to under 20,000. It's a bear market. And an announcement by BlackRock is not enough to turn that psychology, particularly since the world is still trading Bitcoin as a risk asset. And we can come back to that. So keep that in mind. Bitcoin, is it a risk asset? My opinion, no. But sticking with this. So then all of this selling, cascade of selling, showed me the resilience of Bitcoin. It traded 24/7. It absorbed all of this selling, all of these forced liquidations. TikTok, next block, what a beautiful asset. That being said, people have been burned. They feel that, they didn't, some of them got in at higher prices. I like Jordan's attitude. Let's talk in 10 years. So I try not to get too fussed about this. But the reality is Elon admitted that he sold, and Elon has a bit of a meme army. There's no question about that. So this is healthy. This is part of a flushing, a developing ecosystem that can withstand this type of liquidation event. This was digital assets Lehman Brothers moment. Okay. I need to run through some stats with you. Terra Luna lost $60 billion of market value. That's exactly the same amount as Lehman Brothers equity lost. Now, the reality is Lehman Brothers equity had $700 billion of debt ahead of it that also got very haircut, let's put. The reality, though, is there was no requirement. There was no central bank to bail out the digital asset ecosystem. And I'm actually quite bullish on the event. Now, coming back to the reality, we are in a materially different market right now with what the Fed is doing, how other risk assets are trading. So I'm not surprised that the bounce was not greater. In fact, I'm just happy that this ecosystem is being embraced by more and more asset managers who, and this is where I'm coming back, will eventually see that Bitcoin is not a risk asset. It is actually insurance. And it should be, in times of market turmoil, the asset that people run to for insurance or stability, if you will, in storing value. That stability can be reflected in different ways. A fiat price, though, it will always be valuable. It will always be volatile. One Bitcoin, though, is one Bitcoin. There is your value. There is your piece of the network. The value of Bitcoin, the intrinsic value of Bitcoin, is insurance, and it is also as a piece of the network that allows this beautiful transfer of value. So lots of stuff has happened in the last year, Jim. Risk assets, this tomorrow, or 2 days from now, I'm not sure when you'll announce your podcast, but will be the Jackson Hole announcement by the Fed. This is a huge announcement. Okay. Risk markets are on a knife's edge right now. And Bitcoin will, be correlated to that, unfortunately, in the short term. In the long term, though, with decisions like what BlackRock did, Smart asset managers will come to believe or come to see that Bitcoin is actually your insurance. And as a final note, I think that comes out of the credit silo. Having spent my entire career in credit, I think the credit guys view the world a lot differently than equity guys.
Yeah.
I tend to think that the credit guys get it right more than the equity guys do. But at the end of the day, I think out of the credit guys will come a viewpoint that Bitcoin is this beautiful form of default insurance on a basket of global fiats. And there will be countries that fail. I mean, they're failing right now, especially with the US dollar wrecking ball. So lots of things happening. Don't worry about $5,000 moves, though. Those are insignificant. Enjoy the opportunity to stack stats at what I think are incredibly attractive price levels.
Yeah.
And over to Jordan. Let's talk in 20 or 10 to 20 years, kid. I like his style.
So who who decided, or where did the notion come that Bitcoin was a risk on asset? Was it just lumped in with crypto as
Yeah,
this speculative stuff?
could be 100%. So let's break it down. That's a great way to start. If every other digital asset besides Bitcoin are actually securities, then it's not surprising that every other digital asset beside Bitcoin would be correlated to other securities. And you have guys out there like Gary Black, a famous Goldman Sachs equity guy, who views Bitcoin as being a long duration technology stock. And he has a following of other equity guys that say, oh, okay, if I want to hedge my tech portfolio, I'm going to short Bitcoin because Gary Black says it's a long duration tech stock. I happen to believe it's absolutely the reverse of that. It is actually insurance, and it's a long volatility asset, which means as volatility increases in the world, so look at the VIX, as that measure of risk increases, the price of Bitcoin should improve. Why is that? Because it's insurance. It's an insurance policy. And if you have fire insurance and all of a sudden the fire is coming closer to your back porch, the value of that fire insurance goes higher. Now, I'm not going to tell the Wall Street algo traders that they need to reprogram their algos to trade Bitcoin against the VIX rather than trade Bitcoin against the NASDAQ 100. But I do believe over time that will come. And again, I believe it'll come out of the credit guys who understand the reality that the USA debt spiral, DEBT spiral, is the world's biggest concern. And you need insurance on that USA debt spiral. And here's an opportunity to call out a good friend of ours, James Lavish, who wrote a really great article on the reality of the USA debt spiral. So credit guys, they tend to pick up on the insurance angle more quickly. It was credit guys that started to see the problems with the great financial crisis before the equity guys did. It tends to be like that. I'm not saying it's always like that. It's just my experience that it's more often than not the credit guys who know what's going on, and the equity guys are the children in the room.
So I've got a question for you. So based on the fact that BlackRock are in, Fidelity are in, who else is going to come in next, Charles Schwab or whatever, the 60-40 portfolio, so 60% equity, 40% bonds, with them offering Bitcoin as a product, do you think that will become something like 55, 35, 10, that kind of thing?
Yeah, you know what? My advice would it be that you do not take any of your exposure out of your equity bucket. You take the entire incremental exposure to Bitcoin out of your bond. So I think it would be 60, 30, 10. Okay. Yeah. And that's how it should be, because bonds are only a fiat contract. Okay. Bonds are programmed to debase because fiat is programmed to debase, and bonds are a fiat contract. So there's nothing subjective about a bond. It's a contract. You know the coupon, you know the maturity. And you also know that if you give $100 or invest $100 at time zero, and it's a 10-year maturity, after 10 years, the value of the $100 that you invested at time zero is going to be substantially less than it was at time zero. It'll be, maybe 65% of its purchasing power. So, that's what a bond is. And bonds or debt, global debt is the biggest asset class in the world. The total global financial assets in the world are 900 trillion US dollars in today's dollars, 900 trillion, of which 400 trillion is debt.
Oh,
Okay. 300 trillion is real estate. 100 trillion is equity. Isn't it therefore not surprising that the guys that are 400 trillion should know what's going on and be the ones that drive the bus over something that is only 100 trillion, which
yeah.
is the equity market? So the debt markets are 4 times the size of the equity markets. The debt markets are really the adults in the room. There's lots of funny memes. The bond desk is where the adults go to work while the children play in the equity markets. And I'm not trying to get into a fight, but I've seen it so often where the equity guys have no clue where the debt of a company is trading, even though the debt has a prior claim to the subordinated equity, right? You should probably figure out what the prior claim views the prospects of a company if you're going to own the subordinated claim, which is the equity. So I spent my life in that. I frequently owned the bonds of a company and shorted the common stock, as a hedge, because that's how the priority of claim structure works. Anyway, that can definitely get you into trouble these days because you get the meme stalkers, the Bed Bath and Beyond guys that,
Yeah.
they say, everyone's short the equity. Well, some of the guys that are short the equity are the bondholders, because the bonds are trading at 30% of par, and the equity, unless the bonds are worth 100 cents on the dollar, the equity has zero value, right? That's the priority of claim. So I don't want to go too much off on a tangent, but my advice to a lot of your listeners would be credit guys, always look at what the credit guys are doing. They tend to be the more rational people in the room.
So staying on that theme, but looking at the world economy. So I noticed today, I think it was today, you retweeted Jan Woestenfeld,
Okay.
and he put a tweet, or he or she put a tweet out saying Euro area government bonds rising, year-on-year inflation still rising, EU gas futures rocketing, euro breaking down against US dollar parity, balance of trade negative, the euro area is in huge trouble and the ECB is screwed. Now, I 100% agree with that because I'm watching it play out. I'd be interested to see what your take on that is.
Well, I retweeted it, so I actually agree wholeheartedly. I mean, look, let's call it like it is. Germany has not grown in the last 5 years. The economy has not grown, and yet Germany is the glue that holds the European Union together, because the weaker, economically weaker southern neighbors, the pejorative being the pigs, so
Yeah.
Portugal, Italy, Spain, and Greece, those economies are far less robust. And if the German growth engine is stalling, and then you have all these energy pressures compounding the situation, I believe that there is a recipe for some social unrest. Jim, I don't want this to be the case, all right? But come on, you got to admit, like, if you're going to work every day and some of your neighbors, your partners, if you're in a union, would rather not work and enjoy the fruits of your labor, that's got to get some people riled up. I'm not saying an entire population, but look, fair is fair. So I think that the European Union is going to suffer some friction, no question. It's only it's like humans. It's like, you have three let's say you have 3 brothers in a family and everybody puts all their earnings into one pot, but only one of the brothers is working and the other 2 guys are out drinking beer and going golfing all the time. That one brother's not going to be that happy, right? He's going to be like, come on, boys, let's all pitch in, right? So it's only natural to expect that. I also think, though, that the European Union is way behind the ball relative to the USA. So not only is their fiscal and debt situation worse in Europe, but they have a less robust economy to respond to it. That's due to over-regulation, all the problems that we've seen. So the USA is in a pickle, and the ECB's in way worse shape. And by the way, Canada is much closer to Europe. That's my home country. Canada is much closer to the European situation than it is to the USA situation. And by the way, the US situation is not good. It's in fact very bad. As I mentioned, James Lavish's great article on the reality of the debt spiral. So yeah, this is why we Bitcoin. This is why you need insurance against this. And Bitcoin is the only digital asset that will provide insurance, because the fixed supply, it's decentralized. There's nobody calling the shots, changing the protocol from proof of work to proof of stake. There is a beautiful thing that was developed in response to the last financial crisis. And I believe financial crises are like a bus. We have kicked the can down the road. The next financial crisis will come along. It was COVID. The response in COVID was about 4 times the size of the money printing that took place in the great financial crisis, using some of my own numbers. But just look, the next one will require a far bigger monetary response, QE infinity. It's only mathematics. All this posturing by the Fed, it doesn't work. In a debt spiral, you need quantitative easing infinity. And in order to hedge yourself against that, you need hard assets like Bitcoin. Shout out to Larry Lepard. Look, I'm not giving up on gold. I still own a small amount of gold. But the point is, coming back to your 60-40, let's say before it was 60% equities, 37% bonds, and 3% hard assets, that included gold. Well, Now don't take your allocation for Bitcoin out of your gold and silver bucket. Take it out of your bond bucket. I have no problem with the gold bugs. Okay. They get it. I just happen to think that Bitcoin is a better hard asset than it. Well, I believe Bitcoin to be the best hard asset in the world. But my God, if you still own bonds and you don't own gold or Bitcoin, you're doing it wrong.
So what interests me is, things like the European Central Bank, Christine Lagarde, all that whole bureaucratic banker elite lot, they've got clever people who'll have looked at Bitcoin, and they'll have looked at the code, and they'll have looked at the maths, and they've said, look, this is actually pretty special. Now, I know turkeys don't vote for Christmas, but
that's a great expression. Yeah. Well, okay, but okay, Jim, you got to know though that they cannot possibly endorse it unless it becomes a race where another large G7 country does endorse it, and then it becomes a race to first mover advantage. Okay, so like as a Canadian, and Canada's a G7 country. Okay, I cannot believe how lucky we are. We live right next to the largest economy in the world. We largely have free trade between the two countries. We have the world's longest undefended border. Okay. And yet Canada is doing everything backwards, right? We have a prime minister who seems to, he admits he's horrible at math. He's actually scared of math. And that's unfortunate because, math makes the world go round. Math is the base layer of language. But imagine Canada if we were smart enough to stop trading our valuable natural resource energy for payment in US dollars. Imagine if we started asking for payment in Bitcoin. So digital energy paying for natural resource energy. That makes a ton of sense for me as a Canadian who I love the USA. Okay. But Canada is less than the size of California. Population and economy, we are about the size of California. We just really don't matter that much. Okay. And we have to start looking out for ourselves. And one of the ways we could do this, in my opinion, for my children, is allocating a portion of our central bank reserves into Bitcoin. Our central bank sold all our gold. We have no gold. We have less gold than the island of Haiti. Yet we have thousands of gold mines in Canada. Okay. We're a huge gold producing nation. And yet our central bank has zero gold reserves. This doesn't equate to me. Like, how are these people such poor risk managers? Well, sometimes they're paid to be poor risk managers. And then in the case of Trudeau, he just is not a good risk manager because he's very scared of mathematics. And well, like I said in another podcast, I don't go to a surgeon with poor eyesight to get operated on. I wouldn't want the CEO of my country to be really poor and scared of mathematics, but unfortunately, that's what we have.
And so I was to say, if I was to equate the United Kingdom right now, it feels very similar. Europe feels very similar, but the UK, where I live, in Scotland in particular, so Scotland doesn't have any. It doesn't have a central bank. It doesn't have any gold. Gordon Brown sold all the UK's gold 10 years ago.
Okay.
We everything's built on debt. Scotland's talking about becoming an independent country, but it wants to go and put its hand out to Christine Lagarde. So what do we have to do? Where's the tipping point, Greg, for someone like, and it might not be Trudeau, but Canada and Scotland to say, do you know what, we should put 5% of this on our balance sheet?
I think the tipping point comes when the younger generation gets involved. I mean, like these central bankers tend to be old, curmudgeonly, cover your own ass type of guys and ladies. And, you know, I hate to say it, but a lot of them shouldn't be buying green bananas, right? Like, I mean, their time left is, you know, it's just the way it is. And so over time, this is, you know, I think it'll become more accepted. I mean, think of the iPhone. Like, I have this iPhone that I grew up in 1963. I was born in 1963. When they put two men on the moon in 1969, 1970, the amount of computing power at NASA was less than the computing power in this phone. All right. And the crazy thing is, now I'm sort of adapting to the phone, but if I have a problem with my phone, I ask my kids to fix it, right? I mean, like, I don't know how to do this that well, but then over time, the kids who grow up with a phone and Bitcoin on their phone and payment rails that are based on Bitcoin, well, some of these will become central bankers. I mean, that's assuming that central banking lasts that long, that there is not a calamity in the world where central banks and the centralization of finance actually goes the way of Blockbuster. You know, lots of things can happen. So Jeff Booth, another good friend of both of ours, has an expression that 100 years of change is going to happen in the next 10 years. Right. And I anticipate that to be true. So, you know what, I'm close to 60 years old right now. You know, I saw the development of, or the advancement of the automobile, but I never saw the invention of the automobile. But just think of the parabolic increase in that technology over 100 years. Well, Jeff says that over the next 10 years, in an equivalent increase in technology will incur in a 10-year time frame than it will occur in 100 years. Wow. And I believe that to be true. And the people that are going to do it are people like Bitcoiners, people like you know, the coders, the mathematicians, the engineers. But and also, look, I'm not trying to exclude anybody here. It's people who are intellectually curious, not people who are intellectually lazy. Okay, a lot of people are older people, you know, fat white guys like me. We are intellectually lazy. Okay, we tend to say, oh, and by the way, we're also very selfish. Okay, because we're the ones that are saying, oh, it's fine, we're going to borrow from the future and penalize our children's future to maintain our you know, status quo and our level of comfort. I mean, I'm actually disgusted by that a lot of times. Like, what a bunch of soft old white, you know, I wasn't going to swear, but soft old white cucks like me, and I'm calling myself out because I'm part of the problem.
Yeah.
And I'm trying to make amends, right? Like, tell the truth. And so there'll be people telling the truth. There'll be technology. There'll be all these things that will indicate, yes, 100 years of change, the equivalent of the last 100 years of change will come in the next 10 years. And so much is going to happen. It's hard to imagine. So are there going to be central banks that own Bitcoin? 100% in my opinion. Well, highly likely. So 99%. Who will those central banks be? Well, they're already El Salvador, but they're not a G7 nation. But I would love Canada to be that G7 nation that was the trailblazer on that front. Why? Look, I have 3 kids, Jim. I just said, and it's not just for my kids. I want this. It's for all Canadians. I'm a 5th generation Canadian. My old ancestors from Norway came through the UK to Portsmouth, New Hampshire, before 200 years before the Declaration of Independence. Or
Wow.
hold on, it was 1600 something. So 100 years before the Declaration of Independence. That's how long we've been in North America. And I just don't want to give that up. Like, I'm a proud, my granddad was awarded the Order of the British Empire as a fighter pilot in World War I and II. And look, I mean, there's a lot of pride that goes into a nation and the history of that nation. And I don't want it to be blown by some, I guess, prime minister who feels entitled, whose father was a former prime minister. So that's why we think he has all the gumption to be able to run our country now. I just don't believe that to be the case. And, hopefully there will be we'll make amends, right? And that starts with people and education and all the stuff you're trying to do, the stuff I'm trying to do involved with Looking Glass education. These are, selfless. I'm not going to say, but it is, the guys working on this are selfless. They're donating their time and efforts largely for free. The conference you're running in Scotland, you're not making money on this. You're doing it because you want to help the future. And I applaud that, sir. Mathematically, I don't have that long left. And I just want to sit back and try and make some good things, leave the world a better place than we arrived in it. And unfortunately right now, it's not even close to being the same. It's far worse. And I have to point the finger at people. I'll point it at myself, but I'll also point it at the powers that be, right?
And on that note as well, so I've got 2 points. First point is the UK's debt is something like £2.5 trillion.
Okay.
But there's another £2.5 trillion on top of that. It's trillion, £2.5 trillion on top of that, because we have got a final salary pension ticking time bomb. As you said, all the people from my age in their 50s who've retired over the last 20, 30 years and who are getting final salary pensions till they die. And that's what they bought into. Police officers, doctors, firefighters, nurses, civil servants. And I'm not saying that they don't deserve them. That's what they bought into. But the debt is there and it's got to be paid.
Oh, yeah. Here's the thing. That's the problem. There's a contract to pay it, but when you break that contract results in bankruptcy, and then it's restructured, right? So, we hope it gets paid, but the mathematical reality is it's impossible. Okay. The United States has a $30 trillion deficit, but did you know that their entitlements, their unfunded entitlements, Medicare and Medicaid, is another 170 trillion.
Oh my goodness.
Oh my goodness is right. So you can go to usdebtclock.org and you can see all these numbers in real time. And it's scary. And so again, shout out again to James Lavish. I can't say enough about, how simple it is. You just have to see that right now in the USA, and this is the same in Canada, but again, Canada is a rounding error. In the USA, you have tax revenues, that after you subtract your entitlements and your military spending, the amount that's left over to pay interest is actually less than the interest expense,
Oh,
which means that the debt is growing. The debt burden is growing just because of the interest expense, not to mention any of these other $1 trillion deficits that they're adding to the to the historic deficit. So, or a historic, accumulated deficit. So when it comes right down to it, this organic growth of the debt balloon is even before you add another 170 trillion of entitlements. Like, it's just so mind-boggling that the mathematics is just so, well, it's actually so easy that I use the term grade 11 math. It's probably closer to grade 4 math that you can understand this. And it's really quite imposing. Like, there's nights that I sit in bed and I'm scared for the world, because very few people understand it. And then those people that understand it are not telling the truth, the politicians, because if they did tell the truth, they'd cause a panic in the population, and then they'd never get elected for another 4-year term, et cetera, et cetera. So, it's circular, right? It's a spiral in more ways than one. I hate to say it, a death spiral. It's a DEBT spiral, debt spiral, that will turn into a death spiral for fiat. It always happens. Store your value in a hard asset, hence Bitcoin.
Yep, I eloquently put. So, let me just pick up on a couple of things there. One that I wanted to pick up was Canada. So Canada's actually got a Bitcoin ETF, doesn't it?
Yes, and I'm proud to be part of a company that was actually the precursor to that. We had to take the company I was involved with. We had to take the Ontario Securities Commission to court because they denied our application, and we took it to the rule of law, and the Ontario Securities Commission got overruled and allowed us to launch a closed-end Bitcoin fund, so the precursor to the ETF. And then very quickly after the closed-end Bitcoin fund was launched, listed on the Toronto Stock Exchange, Bitcoin ETF was approved. And look, it just makes sense that a cash-based ETF, a spot ETF, is approved. A little shout out for Canada. Did you know that the first ETF ever in the world was invented out of Canada, though? So we do have a history of leading the world on the ETF front. So
Nice.
but again, we're less significant than the state of California on a global economic scale. That being said, hey, we'll take the victories as they come.
Yeah. And leading on from that, so you've got the Grayscale Bitcoin, the
Yes.
GBTC, who've
Correct,
also suing the SEC. You've got Vanguard, you've got Fidelity, you've got others in America trying to get a spot ETF approved. Here's my question to you, because I don't understand it. So the SEC, whether it's Gary Gensler, who's the main man creating the policy or the blockage there, can they indefinitely block the ETF, or does it come to a point where you've got so many amazing arguments going through the financial courts that some judge must say, no, hold on a minute, Gary?
Good question. So, not being an expert in that field in the United States, a lot of the concerns that the Canadian regulators had, that I think the U.S. regulators still pretend to have, including things like potential market manipulation for off trading hours. So when Bitcoin trades in Asia, for example, we were able to prove to the Ontario Securities Commission that the level of manipulation was not nearly as high as the fudsters would like you to believe. So using that same argument with the SEC, I think would carry a lot of weight. But I'm not an expert there. Larry Lepard might be a better person to ask, and he would. I think I know his answer. It would be, they can delay it indefinitely because they are the ones who actually manipulate markets, right? He'll talk about how they're manipulating the gold market and everything like that. So it's going to be very difficult. It's not an area where I feel comfortable, providing my opinion on. What I will say is this, though. in the belief that the US still remains the most capital system in the world, the truest free markets in the world. I believe it's a matter of time. You mentioned GBTC. So that's the Grayscale Bitcoin Trust. That, as you know, currently trades at as high as a 30% discount to its net asset value, because it is not a spot ETF. And there are investors in there that have been penalized because it's not a spot ETF. There was a time, however, that it traded at a significant premium to its net asset value as well. So markets, the ebbs and flows of markets, boy, that's what keeps people guessing. So I'll guess. I'll throw my hat firmly in the ring that I still believe the USA to be the freest of the markets, and my hope is that they continue on that path. Who knows, though, Jim? Who knows? Because this clown world gets worse and worse by the day.
So I know when I look, the more I read about Bitcoin, the more I read about macroeconomics, the more I read about history, the more I'm like, how do we let these clowns run the show anyway? So you and the others are coming across to Edinburgh for our first major UK Bitcoin conference. Now, let me tell you, Greg, the United Kingdom feels miles behind you guys. Even if it's Canada, we are miles behind you guys in terms of Bitcoin products, Bitcoin people. We've got Peter McCormack, who's worked tirelessly over the last three years. And there's a couple of others. There's a lot of people on Twitter, but actually, instead of people, as opposed to people standing up there, standing on the stage or going round, we really kind of lack a lot of bandwidth and a lot of bench strength.
That's going to change. I have met a number of very impressive UK Bitcoiners. In particular, I was in Madeira with Daniel Prince, who runs a great podcast. He's currently living in France, but you can never get the British you'll never get the Brit out of him. And then, guys like Rob Brendan, another gentleman, Peter Young. These are all guys who are trying to do great things in the UK. And it's not surprising. I mean, look, Canada, the UK, the USA, we have a history of cooperation in matters of freedom and, and defensive freedom. I expect, I'm a freedom maximalist. Okay. I'm a freedom maximalist. I think all of those guys are as well. And ladies, Leah, Halpern, for example, just great people. And it's only 13 years old. We got to really just sit back and evaluate the truth that, it's moving quickly, but it's still only 13 years old. Let's just try and take a deep breath. And here's the funny thing. My next time frame is actually 13 years from now. I know what age I'm going to be when I'm 13 years from now, and that'll be 26 years into the life of Bitcoin. And I think it'll be a pretty interesting time. And, I if it wasn't for Bitcoin, I'd be a lot more negative on the outlook for the world. I've met so many great people. It's given me a second how we say second rebirth. I wasn't proud of, I actually, spent 30 years in the fiat system, in the fiat Ponzi, and I made a decent living. I'm not going to lie to you, but I look back on it and I say, what's my legacy? Like, what did I really leave? And I want to leave the world in a better place. So I'm going to do what I can to educate and to share my experience on why Bitcoin is so important and why the fiat Ponzi is what it is, because they don't teach you that in school. They can't. Nope. If they taught you what the fiat Ponzi was in school, nobody would put their money in the banks. Everyone would question the incentives of these central bankers. Like, why are you just continuing to gaslight us and to punish future generations at the expense of your old wrinkled policies? I say that tongue in cheek with a specific European central banker in mind. I mean, you got to get these prudes out of office. It's just absolutely disgraceful what they're doing, and yet they break the law, and then they seem to advance to a greater level of incompetence, don't they?
Yeah, it blows my mind.
Yeah.
Greg, that's almost an hour just gone, and I've still got a list of questions, but you're coming to the conference in October. Let me ask you a couple of quick fire questions.
Yeah.
So, can you describe Bitcoin to someone who's new in the space?
The most important technological and monetary invention of our lifetimes that could provide the greatest asymmetric return that I have ever experienced. So in my risk management career, I have never seen a better upside return opportunity than in Bitcoin.
Wow.
Describing it therefore as that, my final word would be, if you own 0 Bitcoin, you are exposing you and your family to tremendous risk by not owning it.
Wow, that's very powerful. Wow.
Thank you.
Whew. Okay, what song or songs are playing in the soundtrack to your life, Greg?
Wow, that's a great question. I mean, I'm a big fan of I'm old enough to remember the Beatles. I just went to Rod Stewart, okay? And I was not a Rod Stewart fan, but my God, what a great concert he put on. I saw him within the last 2 months in Toronto, and he's got some songs that give hope, okay? Yeah. So songs from the Beatles that give us hope. Songs from like Rolling Stones, Rod Stewart, but then even throwing in some alternative rock like The Clash and London Calling, and so I'm a pretty weird guy. I love I love grunge rock, but I have enormous respect for the history of rock and roll as well. So though a soundtrack would be an eclectic mix of and even got to throw in some Rod Stewart. Once again, a shout out to a guy who I never thought I would enjoy going to a concert that he put on. Wow. Off the charts. Great.
He's some man. I mean, I don't know what age he is now, but he is
77. 77.
God.
Yeah.
Do you know, I'll give you a factoid about Rod Stewart. So do you know when he goes on tour, he'll have his hotel room, and there's a hotel room next door. Do you know what the hotel room next door is for?
No.
His model railway set.
No kidding, eh? Okay.
Google it. He has got potentially, it's one of the best ever. So when other rockers come off and they have a beer, or he goes and works with his model, that brings him down and focuses his head. It's superb. Well,
yeah, it is. Now I got to be careful because I don't agree with everything Rod Stewart does, including some of his views on stuff. But you don't have to, right? Like, you got to understand that if everybody in the world agreed with absolutely everything, we'd be a bunch of walking, talking robots, and there'd be no important discourse in the world. So, but what I did notice about Rod Stewart is he puts his backup singers and the time that these people are from outer space. They're so talented. First of all, there's a unique, beautiful physical beauty from most of these female singers, but their abilities to play various instruments, like, I don't think that they got to be one in, the likelihood of these people existing are like one in hundreds of thousands, and he gets them on stage as part of his traveling tour. And it was incredible. Very Robert Palmerish. I'm shouting him out because great British rocker. He shows pictures of his soccer teams, or football. Sorry, football. His football teams doing various things on stage. So yeah, I'd like to say I'm a a bit of all of those different different
Eclectic.
yeah, eclectic mix of rockers.
Okay, final one.
Sure.
What are you most excited about coming to Edinburgh and the UK Bitcoin conference?
I will have to say that I have a very good friend in my hometown in Canada, uh, who is a uh, Scottish-born CEO of an American drug company, uh, and he's just a great. His name is Ronnie Miller, and his wife. I don't want to dox them too badly, but she pronounces my name exactly like you do, which is beautiful. It's so when you say Greg,
Greg.
I think of her her pronouncing my name, and she's got a list of things that I have to see in
Ah,
Edinburgh, and so I'm just excited to come and see history. I'm excited to meet people. Again, the Bitcoin community always revs me up. um, I am an optimist, and when I get together with other optimistic people, I tend to feel good. So it always gives me a charge to come and meet the people. But I'm looking forward to the history, seeing some of the history. I have to admit, I've never, with all the trade that I've done with London in my life, I've never even visited the city. So it's hard to say. I mean, it's going to be combined with a trip to Amsterdam, and then and from Amsterdam to Bulgaria, and then from Bulgaria, and they're bringing a bunch of Bulgarian Bitcoiners are going to join us in Edinburgh. So very
oh,
excited. I'm really proud of what you guys are doing. I mean, I say from the bottom of my heart, thank you for including me in this great effort. I will make you guys proud, in that I promise that I will tell the truth. And that's all we're trying to do, is just tell
yeah.
the truth, make the world a better place for the kids that, let's be honest, it takes a long time to learn the realities of the world. You can't possibly be 26 years old and have it all figured out, because you don't have the experience to have it all figured out. You like to think you are. And a lot of cocky 26-year-olds out there, and I like their style, but some gray hair is always valuable in a room, right, Jim? So, you and I have some gray hair. And yeah, looking forward to sharing a pint, having a few laughs, hopefully leaving the world or moving the world into a better direction.
Wow. Again, really powerful. Greg Foss, can't wait to see you in Edinburgh, 21st, 22nd of October. Thank you so much for today's podcast.
Really looking forward to it. And my wife is as well. So we'll see you shortly.